So in this piece, I want to talk about our market watch and what's going on with interest rates. So I'm recording this on Tuesday, the 14th of May. So last Thursday, the Bank of England met, all 9 of them. And not surprisingly, we all expected this. They kept interest rates yet again at 5.25%. So, of course, there's been a clamour now for a few months from various people, third parties, media, financial institutions, to try and put pressure on the Bank of England to put rates down. What is happening for the first time is that we actually have committee members at the Bank of England voting for a rate drop. So that is new that's happening out there. So that's good news. But still, it's not happening. So when will the climate be right? When will the Bank of England be dropping rates? Because obviously the knock-on effect is that mortgage rates should also go in the same direction. Now, what do I know? I'm not privy to what's going on with the Bank of England and what they're thinking. However, what I have been saying all year, and I'm going to be consistent with that message, is all around inflation and where that needs to be at before the Bank of England press the button. Now, we're at 3.2% now. The Bank of England target is 2%. So we're heading there. We're not far off. And I would expect over the next month, maybe 2 months at the most, for inflation to drop below 2%. So you can say, oh, brilliant, fantastic, we're there. Let's see these mortgage rates dropping. But here's the thing. That's not going to happen, because what will happen with inflation at that point is it's going to rise again. So I've said this before, when we start to see inflation rising, we will get the crazy headlines. Ignore those headlines. It is a blip. It's a bump in the road. This is what's going to happen. Inflation in Q3, is my prediction, will rise from under 2% to above 2%. It will peak under 3% and it will start dropping again. And it's at that point that I think the Bank of England will take the view, as long as they can have the confidence that inflation will then consistently drop back towards the 2%. I do not believe that after that bump in the road, we have to be hitting the 2% for the Bank of England to press the button. The Bank of England, I believe, will want just the confidence that that blip is over and done with and we're back down the other side, and they see the trajectory heading towards the 2%, then I think they'll press the button. And I believe that'll be in Q3 of this year. So there you go. Now, what's the impact, therefore, with mortgage rates? Because, yes, rates have been going up in the last 6 weeks, which I will comment on in a second. But I believe in terms of mortgage rates dropping, we may well see mortgage rates dropping before the Bank of England actually press the button, because the Bank of England only meet every 6 weeks. And if those conditions are now looking right, if that scenario I've just described, where we've got over the bump in the road and inflation's dropping back down towards the 2%, and we can all see that, then I would expect the banks to come off the fence and start dropping rates before the Bank of England actually get to meet to make their decision. So I would expect mortgage rates possibly to be dropping in Q3 as well. And therefore, as long as that's continuing, I would expect further mortgage rate drops in Q4 of this year. So 0.5% drop in rates, maybe even 0.75%, in that sort of region by the time we get to the end of this year. And that I would hope to see continuing in 2025. So that's my forecast. But just really briefly, we've actually seen mortgage rates rising. So I just want to touch on that. Again, if you listen to and watch the headlines, you would think it's the end of the mortgage world, that rates are going exponentially higher. And that is absolutely crazy, ridiculous. What we've seen is a slight, simple correction by the markets, and hence by the main banks and building societies. That correction's happened. It's over. And we're now just sat on a plateau waiting for that scenario I've just painted a few minutes earlier. In terms of rates rising, as a broker, I've seen rates rising about between 0.1 and 0.3%. So again, nothing massive, nothing major, and I do not expect to see it repeated. So we as landlords should all be quite reassured by that. And again, please ignore the headlines. In terms of a takeaway message, look, I said it last month, and I'm going to repeat myself here because I think this is important. Because I firmly believe that mortgage rates are going to be dropping possibly in the next quarter, then if you have to make that decision now because you're on a standard variable rate already, then okay, you've got to make your decision. But leaning towards a 2-year fix rather than a longer term 5-year fix is really compelling, I would suggest. So be looking and be thinking about taking the 2-year deal, because in 2 years' time, we should absolutely see mortgage rates have dropped significantly so that you can then access those lower rates in 2 years. Whereas if you jump for a 5-year deal right now, then your hands are tied pretty much for that longer period of time. So I'm not saying you have to take the 2-year deal, but it must be on the table as an option to speak to your broker about the pros and cons. And if you want to chat that a little bit more through about your circumstances, your situation, there'll be a link at the end of this piece to our online diary. Book some free time on there and have a personalized chat with the team so that you can get that right information and you're in an informed place to make a decision.